This is my stock tracker part 2, and I chose Netflix as my stock. This is showing navigating the website, and the website is just netflix.com. And then this is, you choose who's watching. You can have different profiles. This is the home page. It shows different TV shows and movies that you can watch. And then up at the top, it has different categories. It has movies, TV shows, originals, recently added, your lists. And then also it has a search bar. And then you can type in whatever movie or show you're looking for, and then it'll pop up. And then you just click on it, and then it just starts playing your show or movie. The share price, February 9th, 2018, it was $249.47 a share. And then April 27th, 2018, it was $311.79 a share. And the price share increased by $62.29. Netflix did not have any dividends paid or an announcement for any dividends. And that picture shows that Netflix is worldwide. The market cap, February 9, 2018, was $108.257 billion. And then April 27, 2018, it was $135.509 billion. The stock price growth, which was 311.79 cents minus 249.47 cents divided by $249.47, and that equals 25%. The market cap growth was $135.509 billion minus 108.257 billion divided by 108.257 billion is 25%, and the market cap increased due to stock prices and share changes both. They were both equal to each other, so they're both contributed to that. And the price of the shares, I purchased 4 shares of the Netflix stock for $1,000 on February 9, 2018. Today, my total shares would be worth $1,247.04. And the price did increase $247.04. I am pleased with the performance of the stock. I was not expecting the price of the stock to increase by so much. If I actually would have invested, I would have made some profit. I would hold on to my stock because the stock seems to continually increase. I could potentially make more money than I already have now, and Netflix is still a newer company, so it still has time to grow. What does this future look like from a professional?
This is for CNBC's Trading Nation. Traders, we're going to go to work on Netflix. Netflix has earnings here April 16th. The options are heating up here. Implied volatility is on the move, and it looks like Netflix is held in here pretty well in this recent period of volatility. So as we take a look at the chart first, you can see that we have a nice pullback ongoing here in Netflix that really has just retested prior resistance levels, now acting as support. So we have an old top here, we have an old top here. The decision was made. We're going to beat up those sellers. Buyers went to work, and now what happens is we come back and retest the scene of the crime, so to speak. People who are caught short here are going to buy back to get back to even money, just like if you go down at a casino table, like, oh no, I'm down a bunch of money. If I can just get back to break even, I'm going home. It's kind of the same thing here. So that new support level is formed, and we're beginning to move on up into earnings. Now, it looks like we should be able to retest at least 320 and possibly the old highs around 340 if we have a good earnings report here. Now, as I mentioned, implied volatility is on the move. You can see this IV average. This is the general pricing of both puts and calls is increasing, which is very typical around earnings. So let's go to work. I want to put on a bullish earnings trade by selling these expensive puts. You don't want to buy expensive calls heading into earnings. You want to sell expensive puts, and you can see that implied volatility is pretty escalated. So what I want to do is I'm going to go out to the April 20 options. These are the options that have the most increased elevated levels of implied volatility because they're right around the earnings report on the 16th. I'm going to go out and sell an option put around the 290 strike. That is going to be a delta 30. Real quick lesson in Greeks. What that means is if it's a delta 30, basically the options market's pricing in a 70% chance that this thing does not expire in the money or it expires worthless. Okay, so the delta 30 is going to be right around that 290 strike. I want to sell that put. Okay, basically they're saying there's a 70% chance that we collect the premium of roughly $8 in our pocket right now. However, I want to cap the risk, so I'm going to add another leg to this trade. I'm going to be buying the lower put, which effectively creates a floor, caps our risk at 285. So I'm going to go ahead and add an extra leg here. Okay, so by selling the 290 put, we're going to take in roughly $8. We're going to pay for the 285, which is about $6.50, give or take, depending on your execution. So we should take in right now $1.53 in credit in our pocket right now. That trade is now pending. So this is an all or nothing trade. Be sure to trade a size that is comfortable for you because you can adjust the trade after hours when earnings are reported. So we have $1.50 roughly that we're looking to take in. So we have roughly $350 of risk on this trade. Why would you take a skewed reward to risk trade? Well, as I mentioned earlier, option markets are saying we have a 70% chance of success. So that's why the markets are going to force you to take a skewed reward to risk ratio. However, when implied volatility drops post-earnings, the value of your spread will increase. And unless we're drastically wrong in the report, we should be okay in the trade. All right, so again, it's all or nothing, position size accordingly, and that's the earnings trade in Netflix. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that. Be sure to follow us at Trading Nation on Twitter for updates to this trade.
Alright, here's some news. Reed Hastings, who's the CEO of Netflix, sold 75,558 of his shares of Netflix. Netflix is predicted to pass Disney in the stock market, and Netflix is creating problems with cable companies. Recommend the stock? Yes, I would, because it seems to do pretty well. The company is still new, has plenty of time to grow and create more profit. The number of subscribers to Netflix is increasing. You would most likely make a profit if you held on to your shares. I would recommend to buy stocks soon because the price could go up higher soon.